Welcome to the We Fucking Love Startups podcast. I'm your host, Troy Hammond, and on today's episode, we are chatting with Brooke Roberts. Brooke is the 3EO of Sharesies. I said 3EO, not CEO, and that's because there is 3 CEOs, and Brooke tells us all about why it's working, and I was actually a big believer in it now. I wasn't initially, I am now, and I love the Sharesies journey. That's something that I've been a believer in since the start. It's helped me and my kids. It's helping lots of people I know. I've made some money on Sharesies as well. And so I'm really excited to hear about what's next for Sharesies. I know they've got some big things bubbling, and I'm excited to talk to Brooke.
Kia ora. Thanks for tuning into the We Fucking Love Startups podcast, brought to you by Talent Army.
Kia ora koutou, called Brooke Tokungawa. I'm Brooke, one of the co-founders, co-CEOs of Sharesies.
Awesome. Hey, it was so good to have you on. I've followed the Sharesies story for a long time because it's so cool as a Wellingtonian, right? When you see these Wellington startups, from a small little idea that you hear that you're like, oh, that could be something. That could be really cool. And I think Wellington's so small. We know the startups. We know too much about everyone's business. It's a bloody village that we live in. And so, I feel like we all go on the journeys together with startups, by osmosis. We all hear about stories and likes. But how did Sharesies come about? What's the non-marketing PR story? A lot of companies now, they're really good at iterating on what the story is to the point where when they get up and do their TED talk, it's this hilarious, it's not hilarious, it's this beautifully tokenized, this is the story. I love to hear about what's the real story? How did it really start?
I feel like anytime I tell that origin story, it is the same, and it is because that's how it was,
Yeah.
But
well, that's cool too, right? I'm not.
That's how I recall it. But let me know if you want to pick into it anymore. But I'll tell the story from my perspective because there are 6 founders, so we all have different perspectives, I guess, which is quite important to acknowledge. But from my perspective, I was really keen to start a business and really keen to do something in the fintech space. I had worked at Kiwi Bank and learned a lot. I had studied finance and I'd worked in banking and just saw heaps of opportunities there. And then also working at Xero and seeing how technology can take on the world from Aotearoa. And so I was really interested in this space and was starting to look at ideas there, along with my husband Layden, who was we both wanted to start a company together. It's something we always wanted to do, and we were tutoring with a bunch of ideas actually. And
because Layton had an investment club with friends or something when he was young, right?
Exactly. Yeah. So he had worked in at Kiwi Bank too, and had 6 years in the army band before that as a trumpet player. So really varied background, but we both did young enterprise. So I think we always had that interest at heart.
Yeah.
And then his friend Martin, who's one of the co-founders too, they were in a band together. Martin plays a lot of percussion and piano, and Martin is had a developer company with Richard, who's another co-founder now, and we were all looking at ideas of what we could do together. And then Layden at the time was working with Sonia. Sonia's also worked at Kiwi Bank and Xero, but we pretty much were like ships in the night when we actually never worked together. But Layden really enjoyed connecting with Sonia and vice versa, and Sonia got connected with Layden to tell Layden about her idea, which is, I wish I could be investing in small ways over time, and it should be fun. I should be able to feel like we could develop wealth, especially with the information at that time of millennials spending all their money on smash avocado, and it felt like you couldn't get ahead with money, and she wanted to find a way for $50 to become meaningful, or what to do with that. And she got connected with Layden because Layden, like you said, started an investment club with 13 or so of his mates when he was 17 years old, putting money away each week. And they still do that to this day. And their first investment was a cow, because they're in Hawara, and then a herd of cows. And it's amazing how it grew from just that peer commitment they had with each other.
So that's the premise of Sharesies, right?
Yeah. And then Ben, though, too, was a real advocate for Sonia. He's an incredible creative and Sonia's partner, and a massive advocate for this idea and bringing it to life. And so she was like, you need to make this happen. He said that to her, and she really believed that too. So we all came together. In October 2016, we all got together in a meeting room. It was actually at Kiwi Bank, which is funny. We brought them in. We all, the ones that I wasn't working there at the time, and we all sat down and we chatted through a bunch of ideas. And there were two, I think, and ultimately we decided to go with this idea. It didn't have a name at this stage.
Yeah.
And we then submitted that to the Kiwi Bank Accelerator, but as part of our FinTech Accelerator that Creative HQ was running, but as part of our application form, we had to have a name. What do we call this? And then with Sonia's brilliance on the back of a scooter ride home one night with Ben, she's like, I've got it. Sharesies. It works on so many levels, and it really does, and it's stuck since then. So,
well done, Sonia. I love the name.
It's great. Oh, she's fantastic. Yeah.
Yeah, and that a bit of PTSD there talking about scooter rides with me recently, but
oh yes, sorry, I should have thought about that. Yeah. Are you okay?
Yeah, I'm good.
Yeah,
I'm good now. Yeah. I didn't have any breakthrough moments of naming companies, unfortunately, or anything. Maybe I should get back on the scooter and try again. I'm also trying to name a few companies at the moment. But
are you?
I love Sharesies, and I love what I instantly loved about Sharesies was that the messaging was clear, right? That you were trying to get millennials at the time to start investing earlier, or people to start getting investing earlier, to make it a little bit fun. The second thing I really loved, which is probably, I'm not sure if that was your messaging, right? But that was what I sort of took from it. The second thing I loved was it was beautiful. It was pretty, it was fun, and I felt the emotion of the message was in the look of the product itself. And so it just instantly, it was an attractive product to look and hear about. And so I want to know, is that something what was the method behind that? Did you go to market thinking, all right, it has to have these things, or?
Well, we'd got together in that meeting room and submitted our application, but we knew we needed to, it was just an idea. It was like, is there something? But we needed to really see, is it something people really want? So we then spent another 6 months doing pure customer research, so just talking with people, deep interviews. We started with our friends, then asked them if they could tell us somebody else we should talk to, and then we talked to them and kind of just started to build it out. And from that, we learned so much about how people feel about money.
Were you full-time on this then?
No, I wasn't at this stage. Yeah, it was on the side. We were just kind of talking with people. And from that, we just learned so much, how people didn't think they were an investor, and then they had KiwiSaver, and they didn't feel like investing was something for them, or they didn't think that they were good with money. A lot of people said that, like, oh, I don't know about this, and felt real. You could see the vulnerability anytime money was mentioned. And it was really insightful hearing these conversations from people, and people opening up to us. And from that, it gave us the impetus in a lot of ways to go, oh, we actually need to go full time on this. Like, the risk of not doing it felt greater than doing it because of all these stories, and then and these perspectives of people's lives, and how money was so negatively, so many negative connotations around money, and we wanted to see if we could flip that. And we did notice through the interviews and that research that investing is a way where people could start to see hope and start to see how money could grow, and start to learn as they go, and not feel blocked out essentially, and left out of and priced out essentially, as we used to talk about and still do, of investing and developing wealth over time. Yeah.
So the key things that you found through the research were that, that's interesting, right? So just to touch on, sort of go back, I remember at the time, so many people just didn't know about investing, right? They were scared of it. It was this foreign thing that you had to go to a broker, and that you had to do these things. You didn't even know how to start that. It was, even for me, when I first started thinking about investing, I was like, oh, I don't have enough money to invest, or I wouldn't be reputable to someone if I go to a brokerage firm to be able to say, hey, I'm going to invest, or I wouldn't be able to open the newspaper and be able to pick the right stock, right? And so without doing it. And so what was the research, like the breakthrough that you thought, yeah, we definitely can help these type of people?
A lot of it was around our understanding of how technology could be used to remove a lot of those barriers. Like, there's no reason you have to have a minimum investment. it doesn't need to be that way. There's ways that we could work within the regulatory environment and work with regulators to make that possible. We knew that so much of the jargon just doesn't need to be there either. You can just use everyday language. Like we all deal with money. Putting jargon to it just makes it feel so much more elitist, I guess, and not accessible. So why can't we just use everyday language and just and make sure people can make the most of the time they have? And then what I want to touch on what you said before was a really key part is that branded out or left out. With technology and what was available, you can create such better user experiences that feel and put more feelings in money, I guess, or not make it feel so cold and hard. And that was a really key insight that Ben really drilled into, along with Sonia and all of us, in terms of how we make this just as easy as online shopping is what we talked about back then. How do we make it just really simple and part of how people are used to experiencing technology, not trying to get them to fit into how the finance industry works or how it's traditionally worked. And so that was a big part of, us having a pink brand. We often got asked, is that because you're only woman? And it's like, no, colour has no gender. Yeah. It's more about that being approachable, fun, lovable, like it should be.
It has a motive, right? Like, and it gave the motive to me. I love pinks. Yeah. Pink's great. I wear pink all the time. A couple of things I want to touch on from that, right, is so 6 co-founders. How the fuck do you assign roles and responsibilities and the likes, and how do you figure out how to run a business forward with 6 co-founders? And then we'll eventually get to the three down the line. But let's start there. So how do you define roles and opportunities there? Yeah,
it was really clear for 3 of the founders in particular. So Ben, creative, chief designer, totally a unique skill set there. Martin and Richard, developers, that's something Leighton and Sonia and I don't have their skill set there. Then, but Leighton, Sonia and I were the first founders to go full-time on Sharesies, and we have unique skill sets, but also quite a lot of overlapping skill sets too. So as part of the accelerator, they made us pick who would be CEO and that type of role. And ultimately, I think any of us could have done it, and we all thought that too. But then we just looked at the practicalities. I was like, cool, well, I was going to have more of a skew towards the company side of things and raising money and all of that. And so therefore, I was more likely going to need to be in the room with, a CEO will need to be in the room with these people when you're trying to raise money. And so they're like, cool, that makes sense. Leighton had a lot of understanding on the regulatory side and also the operations and how we could actually drive the change we needed. So he had he took quite a strong lead in that. And Sonia early on had a massive lead in the product and marketing space too, like how we really connect this. She's got incredible customer research background too, and how we shape this product in a way that and get that product market fit phase. So even though it was all intertwined a lot for all of us, and we all pitched in, I think those were the natural places that we started to take shape early on.
Seems like it was an easy process that you went through then versus some people that it's a little bit scrappy.
The thing that we did really early on, the first week of deciding to go full time on this, we got all the founders together and sat down and talked about what we wanted Sharesies to be like. We knew we were creating a company, not a product, or not just a product. So we sat down at Egmont Street Eatery. They used to have these great sodas back then. So that was our pulling card. Big piece of paper and just writing down the bullet points out of this conversation. We're asked questions like, what would it be like to work in the most amazing company? What are things that you have seen in other companies you never want to see here? And from that learnt a lot. And
what were those things like that were written down?
Well, the things that were written down easily themed up as our values. So our value of Chase Remarkable came up, which was like, we want to remove ego, we want to really take bold steps and calculated risks. We know it's a chase to be remarkable, like that we're always chasing how can we do this different and add more value to people. So that was one that came up. Another was in it together. We've been in companies before sometimes where there's an individualistic culture, not a collective, and where one person gets to stand up and be heroed, and it's everybody's work that makes that possible. And so how do you create a culture where you're really in it together? Anybody can bring ideas, there's no barriers, you can bring your full self. that was a real important thing for all of us. And then always care. We wanted to create a place, and we knew what we were going into, starting a startup and all the rhetoric around it, that can we still care for ourselves, and can we set this up in a way where, we know this is a ultra marathon life work probably. How do we set ourselves up in a way that we work where we can care for ourselves? One of the founders had just had a baby, and just making sure we could have an okay balance there. And then also care for our investors and our customers, and never lose sight of that. Because we see sometimes that just becomes a bit of a, oh yeah, we care for our customers. No, we really do. How do you show up and make sure that's really part of who we care for, and then care for each other and our why, I guess. And those were there were actually 4 values that came out of this the conversation we had, but one of them we wrapped up. Did you
know that were values at the time? Did you?
It wasn't,
because it's interesting. I would say, that's awesome. Hat tip to you. It's not often that I hear founders having that level of conversation about the feel, the want, the product, the everything about wrapping the company. Because I think a lot of the time we just jump into something and then we're figuring out on the fly, and it's probably not until you're starting to see some success, or you need to redo your website for the version 2 that you're like, okay, we need some values up there. What the fuck are our values, right? But to have that sort of come from the DNA about what you wanted it to be, I think is cool. Exciting. And
it was probably one of the most important meetings we've ever had at Sharesies in a lot of ways, internally, because we were a group of founders, and as you heard, there's 6 of us, and we all didn't know each other that well. And this tied us. We were very all aligned with our purpose and why we're there, but this aligned us on how we operate together. And then it's enabled us to have the really great, challenging conversations with each other, and absolutely admire and adore each other. There's a really great balance there. And I think from having that strong foundation and such clarity on what we're doing and why we're doing it, that we've been able to be so close, 6-7 years later, which a lot of people thought was not possible.
Yeah, but it's hard, right? To have, I was having this conversation with someone the other day about how I said that I like a little bit of angst in conversations, tension. I said I like tension in conversations, because I like to know that especially in work or companies that I'm involved in, I like to be able to have really honest conversations and say, hey, I need to get this off my chest because it's something I'm thinking about, and I don't want it to be a bigger thing than what it could turn into. And so have a little bit of a challenge conversation, but in a place of love where we can come together and say, no, right or wrong, or when this needs to change or this doesn't need to change, and then we hug, move on, and go to the next thing. But it's hard. You have to set those conversations up, or set the structure of that up with people that you're going to be on the journey with from the start, and let people know who you are as a person, how you like to work, what are the types of things that we want to be, so that if these little turning points come up, that we come from a place of trust and respect, and as you say, have challenging conversations and sort of move forward. It's definitely tough.
I just love it though, because I just know if any of the founders, and actually a lot of the team, want to give me feedback, that I'm so keen for it, and I know each of us are, and I'm just like, oh, thank you, someone's looking out for me, or there's a lot of care that's put into just having those honest conversations, so it's important.
Yeah, awesome. It's hard, right? It's and then it's how do you scale that? How do you keep scaling that? Who knows, right? No one's got all the right answers. Every time I talk to someone about transparency and feedback, they're like, we got to this level of transparency and feedback, and realized that we couldn't go further with that, or we had to stop telling everyone the information because they were starting to freak out a little bit when it became bigger growth and more, harder to raise money and the likes. And so, yeah, it's challenging, but I think, I love that you've had that conversation, Ellie, and I think, the DNA of a company comes when you're doing sort of founder vetting and trying to work out what the person's core values are, and if those core values align for a company core value. And that's when you can really have proper values versus this will look really cool because Atlassian said, don't fuck the customer. Let's put something like that on. And so, hey, talk to me about the accelerator programs. Was it worthwhile? Was it something that you would do again?
I wouldn't do it again now. Mm-hmm. If I was starting Sharesies again, it's hard to know in retrospect, but I think it was really valuable for us having a place to come together, having a
physical place.
Yeah, a physical place to work from, which was quite important for us at that time. It was a big draw card for us to have a demo day and exposure to a bunch of people that really helped us get started. So the Financial Markets Authority were involved, and we got to meet, two of their senior leaders were a key part of conversations with us around, especially when we were in a fintech accelerator, AML and the legislation. So that was really great, having those doors unlocked. Another great thing was being connected with Jeremy Muir from Minters, who just gave us so much advice and is still a key lawyer with it, that we work with a lot today. And then connection to the investor community. We hadn't done fundraising before or capital raising, and so it was great to be able to get connected with that and with the demo day and stuff. So getting tapped in with Creative HQ and their community was phenomenal.
So why wouldn't you do it again?
Then the downsides were for us is we had quite a strong founding team with experience in business. So I think it's really great for people who don't have as much business experience, because it's a crash course of how to get started there. Yeah. But we were a little bit of the naughty kids, I think, because you would there's structure in there that you needed to go to these certain events or go to these certain speaking things where it felt like sometimes it was orientated to learn how to create a business, not create a business. And we quit our job, like we were all in for this. So we really wanted to create this business. Now, I think they've taken this is years ago now, right? So from Leighton's mentoring in an accelerator program at the moment, and it's definitely changed a lot. So I think there's a lot of learnings that have come and a lot of adjustment based on people's skills and knowledge when they go into an accelerator. So I don't know what they're like now, but I feel like we've had this experience of starting this company, and we've got a lot of the community and connections now that if we were going to start something else, which we don't plan to, but if that was hypothetically happening, then we've probably got a lot of what we need now. And then another issue in accelerators is you're sharing a lot of your ideas and your IP and your learnings, and the propensity for that to be taken is kind of high, and so you got to be really careful about.
Did your IP get out?
There's elements that were quite that I think got a bit hard. Some of the companies ended up pivoting into kind of similar stuff to us, and then that got tricky to deal with, and it's just a bit of a so it's harder if you end up being in an accelerator with companies that are looking at doing similar stuff, because it's not you rising tide floats all boats, and I really agree with that. But also you're just trying to start something from scratch, and you want it to be a bit more collaborative rather than competitive, I guess.
Yeah, definitely. Yeah, I think if I can say honestly about like Creative HQ, I didn't work with Creative HQ much for many, many years, because there was a bit of Kool-Aid and, like culture and lots of pressure on people to do a lot of, like what you're saying, right, go to so many events and do all these things. And I knew some founders that were in there that just wanted to build shit, right? And they wanted to move faster, and they wanted to just break the rules, right, and be the naughty kids, as you said. I think like I've been approached by Creative HQ a lot over the last 12 months about what they're doing now, and it
fantastic.
Feels like it's really on the right path. And
it's such a incredible community, but also just a place for somebody to get started. If you've got an idea and you want to have that, there's a safety net there, right? Where you're nurtured a lot and you've got a tight deadline, which is also phenomenal. So I do think they do incredible work, and there's a massive role for them to play, and then it's just how you show up in that and how you set the expectations.
Yeah, cool. And it's not for everyone, right? It isn't, I agree. Cool. Hey, so one thing that I noticed about Sharesies, I think that, and this is like my personal opinion, right? You seem to build like a financial application a lot faster than most people. It just seemed to be that Sharesies was just growing really fast. Like the product was getting out, it was iterating, it was out there faster. And I know some other companies where it's taken a lot longer to get products out. Like there's a lot of regulatory stuff, AML. There's a lot of challenging things that you have to do when you're trying to build a fintech product. And so how are you able to get something out faster? Or do you look back and go, fuck, we were so slow?
I think on the day we always feel slow. I hear you there. We gave ourselves, at the start, a deadline of we have to have something that is launched within 3 months, that works within the regulatory environment, and also meets what we see as a massive opportunity and need for people, and be able to get funding to be able to continue. So that was our 3-month goal. So you're running fast.
Pretty aggressive.
And we were able to achieve it, which was amazing. And I think there's a lot of luck in there, and the economy at the time. I think the timing was right for Sharesies, and also just relentless focus, I think, on what was important. The founding team and the strength of that is the reason why we were able to develop and our ability to connect with these people and that accelerator and the community we'd built through our networks too. I think all of that just expedited a lot for us.
Yeah.
So
were you doing
developers and designers.
Was that 3 months in like intense in terms of output of hours and work you were doing, or was it the same that you talked about, like trying to protect yourself?
During that 3 months, Layden and I got engaged, and I was hapu, so it was all, so we didn't get engaged, we got married. So we had a 3-day honeymoon over a weekend, but like it was a time of life at that time where it was just fully worth it. And I think we were pretty good with our time in terms of knowing, well, in order to be effective, you also do need good sleep and you need to look after yourself. So I think we were pretty good, but I wouldn't know. I can't really recall like the details of the day-to-day.
Yeah. And did you invest? Was it a personal investment from all 6 with, accelerators, or was that just like time investment initially?
Oh yeah, it was definitely all time at that time. Yeah.
Cool. And so when did you know, like once you got the product into market, when did you know, holy shit, this is something?
We started to know before our product was launched, when we had a website up that had a wait list. And through another great thing about the accelerator was our access, the press around it, and people wanted to interview you and you get exposure to some press, which was awesome. And so that started to get Sharesies awareness out there, which then led people to our website, and then we'd have a wait list, and we had like 6,000 people on our wait list before we started Sharesies, and okay, how did that happen? And so that was definitely an early sign where we got to test on our website the messaging that worked.
Why do you think? Was it the messaging on your website?
It was more, there's a massive need here and people were keen for this to be solved, and it's like, and are we solving it in a way that feels approachable for people? Does it feel like it's going to add value in their lives? At this time, it was $30. When we launched, it was a $30 at sign up, and you got access to 6 exchange traded funds. Like such a fundamentally different product than we've got now. But it just showed, we wanted to create the minimum lovable product we'd talk about. What's the minimum lovable we can do to see that this is that we're meeting what
I like
people
that
need.
minimum lovable product.
Yeah.
MLP.
Yes.
Yeah, nice. Awesome. And so then you noticed, right, holy shit, we've got so many people on our wait list. Did that instantly feel a bit of pressure? Or was that excitement of like validation?
I felt excitement. I'm sure other founders might have had, who knows what they were feeling, but I was like, let's go. This is cool. There's actually interest here, and this is worth all our time, Yeah,
awesome. When did you start to go out and start looking for investment?
We got approached, which was awesome. In the accelerator, there's some people that are part of the Angel Association, and one of them was like, I love what you're doing. Here's some money as a convertible note. Really want to get in, which was awesome. Then we did a podcast with, I think we did a podcast early on with Sonia and I, and then somebody contacted Sonia after that podcast and was like, I love what you're doing. I really want to invest. Can we please meet? And she didn't think much of it. She's like, I don't know if that's true or not. And then she's like, actually, this could be something. So like a couple of weeks later goes back, we meet with them, and then they really set off our round. They're like, I'm really keen on this. I think,
awesome.
You've got a great team. Here's what I'm keen to invest in. We're raising a convertible note at that stage. And so we'd start to build a lot of momentum before we did our pitch at the end of the accelerator, which was really helpful to have that momentum, which breeds momentum, which meant that we could just keep going. Yeah.
And so convertible note, right? Like a lot of people listening to this won't even know what that means, right? And so we'll put some information in the show notes where they can go off and read about it. But did you know about this sort of stuff before the accelerator?
Figured it all out as I went,
And where did you learn it all? As this, nominated CEO that's responsible now for all the finance and business stuff, where do you find all this information?
Well, we all would yarn about it too. I'd studied finance, so I think that helped have a little bit of an inkling of how things could work. We were really fortunate to have Paul Williams, who was early on at Xero, and a massive pay it forward person who would spend time with us every week. And Paul's got a lot of experience in startups and an accountant by trade. So that was really helpful, having his advice along that time. I'd call up mates like Tony at the, and go, you've done raising, how does this work? I would ask lawyers and we'd just try to figure a lot of it out. What's a safe note compared to law? And ultimately would hold firm on making sure we weren't doing anything in any of our raises that were going to eliminate other people being able to invest later on, or make us harder for us to be attracted to be invested in. So that was something that, I'm pretty much saying watching the terms.
Yeah, cool. Yeah, it's challenging. Like, you have to learn a lot, right? So quick upload of, information, download information. So then you move out of Creative HQ, you move into that office. I think I came and met you all in the, what
Wigan
was it?
Street.
What was the main part of the office? It was like car radios or
street sounds.
Street sounds, upstairs and a couple of meeting rooms and the likes. And so you're like, we've made it. We've got our own office now. You look back
we
up fondly.
loved it.
Yeah.
It was a great part of town to be too.
Yeah. And then it became like, Sharesies became a really, like a place very quickly that people wanted to work at, right? Like, I used to get a lot of people say, I'm interviewing with Sharesies, I like this. And so I have opinions on why, and probably largely around the conversation we've already had around the values that you wanted to try and bring, because they came out naturally into the market. Like, I often hear startup stories and I say, but like I said it before, I'm like, that's a bit of a crafted story, but like, what's the real thing? Because that's where people buy in. That's what they believe. When you authentically tell your story, you get people turning up to work because of the authentic reason that you're telling it, and they're wanting to do that because of it. And so why do you think it was like instantly lots of people wanted to come and join Sharesies?
They had either experienced a problem themselves or seen it in their whānau or their friends, and really want to change the game when it comes to being able to develop wealth and have access to money. And so I think that purpose was a massive pull card, and it's like a problem that people wanted to spend their lives working on, or parts of their life. So that was pretty important. I think being a B Corp and having those value, or that way of working and thinking ingrained early on too, I think was pretty important for people.
Yeah. What's a B Corp for those that don't know?
So B Corp is essentially a business that's a force for good, where you're monitored on how you the way that essentially there's B Lab who run a B impact assessment, and you can do this, any business owner or any business can do this free online, and you essentially answering questions to determine if you can get to a score of 80 in terms of how you treat your customers, how you treat the environment, what you've got in terms of your governance practices, and your employees and things like that. So you're doing this assessment, and if you get to a score of over 80, it means that you can apply to become a B Corp, and then you go through a rigorous audit and accreditation process to become accredited. But what I love about this B Impact assessment for any business owner, and what we did, because you have to have a year's worth of revenue before you can actually put your application in. So we did this early on in the accelerator, and we're like, we can't enter it because we don't have any revenue yet. But it was great for us to look at the business really at Sharesies or any business really holistically and going, okay, here's some things we're doing for our employees, but have we ever thought about this? What's a whistleblower policy? Is that something we have to think about now? Or you don't have to be perfect. You don't have to get all the points, but to be able to become a B Corp.
About it, right?
But you start thinking about it. Oh, cool. That's something we could think about later on. Maybe once we've got some revenue, we could start tracking our carbon and making sure we're making choices that are efficient on carbon or low carbon or no carbon. So they were really cool. I found that tool really great. And then being part of the B Corp community, once you become a B Corp, which we've been ever since we could be, it's that there's businesses there that are really give a damn, And in our constitution, we're not just for shareholders, we're for stakeholders. And I think that's quite important for any business. Yeah.
Awesome. And so then the company started growing larger, right? As Wellington does, right? The companies that are like all of a sudden, they're a thing. The whole of Wellington gets behind them and says, it's the next Xero, it's the next this, and it's the next this. And you get all this popularity, you get all this profile, like a lot of PR. How does that feel as someone, right, that's got this startup? Because like all of a sudden, you and Sonia and Leighton, everyone, we're everywhere, right? Like, and they were just, and you in particular, right? I felt like your face, probably because you were the CEO initially, right, was the face of the company. And you, like, if we look at your LinkedIn for the last 2 weeks, you're meeting the Prime Minister, you're doing interviews, you know, like you flew with Jacinda to Australia, like Wellington NZ did that huge, cool, that was really fucking cool, that drone video, by the way. Like, you've had a lot of pressure to be this Wellington success story. Like, talk me through, how does that feel as someone, because this is your first startup, right? And then all of a sudden you're this Wellington darling, or Sharesies is this Wellington darling, and you were the more of the public face of it initially. How does that feel for someone?
I just don't think of it like that. It doesn't. I think there's a team of us at Sharesies, and there's that founding team that I don't feel a pressure of any sort. I feel more I really want us to be growing ahead of our customers and our investors, and I think that's where I probably most care about. I've also always known that tall poppy stuff can happen in Aotearoa, and we're all aware of that. But I think that there's a lot more. It feels like there's a lot more protection.
Have you felt tall poppy? Because I was having lunch with Rowan Simpson the other day, right? And he was like, "Tall poppy's not a thing anymore, Troy." He's like, "I feel like we're enabling people," and I was like, "Well, as someone that's on the inside, I definitely see it, but I'm starting to see that we are pushing people and letting people go now a bit more."
Yeah, I think that there's a lot more support. It feels like and I don't know if I've felt tall poppy, but I've always been aware that somebody told us early on, about 5-6 years into your journey, you know, wait for the tide to change, you know, and it'll be harder to get, you know, that positive sentiment. And I'm not sure if I've completely noticed that, but it's something I think you're always aware of. And what's at a company, but I think that there's just so much support out there, and I've got really cool networks that I've developed, because that's a big part of starting any company, and being, you know, you're learning as you go and you're figuring it out, and you want to be ahead of the curve in terms of where Sharesies is at, so I can, you know, hopefully be leading ahead of the size that Sharesies needs at any time. And so having a strong community is really important, and the founder community, I think, is starting to come together a lot more and support each other and have real yarns, and it's not all like competitive and who's better or whatever. It's like, oh my gosh, have you ever done this thing really weird, you know, like, or it's so much nicer to just know you can call anybody, you know, people up and have a real honest conversation, and they'll be there for you in the highs and lows.
I love that you feel that way, because that's, you know, like largely what a lot of us are trying to do now in terms of supporting the ecosystem, right? So that people feel less pressured and impacted. But there's, you know, like I know some people out there where that pressure is debilitating for them a little bit, you know? And so, like, unfortunately, like with Sharesies, is a restructure recently, like when you're being made up to be, you know, one of the darlings, and then you have to do a restructure, that's probably when you get some people like, you know, a little bit of, you know, tall poppy and the likes. And so how, like, does it come into play there with the restructuring? Is it like, fuck, now we've got to do a public restructure after the public good? Or is it just, I'm happy because it's business and we're in the spotlight, and we, you know, you see the good and the bad, and regardless?
I think in particular with the restructure, just all my focus was internal, so I didn't, you know, like, it was all about how do we support our people through that at that time. But I think sometimes the little jives, I guess, can just come in the odd ways, where it's somebody's opinion on a product. The parts where we get jive sometimes, which kind of does grind my gears, but it also ignites a fire sometimes, because it goes right back to when we started around, you know, retail investors or Sharesies investors. They won't know what they're doing, all of that.
Is that competitor-y type people?
And then you can get, you know, opinions on that or quite a bit. And data just shows that the majority of investors on Sharesies are investing for the long term. They're well diversified. They're investing in exchange traded funds and a bunch of things, and they're being consistent and having investing in a way that is what I guess other people weren't expecting. You know, I think
Yeah.
especially when there's like say GameStop and things like that, and everyone thinks it's all traders. It's just
Yeah.
not like that.
Yeah.
And I think there's just so much.
I made a bunch of money on GME on Sharesies. Thank you.
Oh, cool.
Yeah, I've been a loyal Sharesies customer from like really early days, and
Oh, cheers.
got my kids account now on Sharesies. Really excited about the savings stuff,
Yeah.
which I want to talk about as well.
Yeah.
And so I think it's been a really cool product. I've been emotionally involved on the product since I saw it, because for me it just felt like, oh, it's accessible, it's easy, I can do this, and love it, big fan of it. And I think
Chuck to hear that.
the restructure stuff, I'm the first person to hear about a bad restructure as a recruiter in the market, handled really well, and so I think it was done with love and respect, and and so well done there. And unfortunately, that's part of business, right? As you grow, it's like 5 years in, 6 years in, 7 years in, bigs up and downs. But sounds like there's some exciting stuff like launching and coming for Sharesies. Like, can you talk about that sort of stuff now?
Oh yeah, there definitely feels like there's some awesome momentum. We worked really, really hard to change the game with KiwiSaver, and it's hard work. It's really hard work, but it's so worthwhile, and we need to do it. Oh, absolutely not. It took 2 years to get our license. So that's because we're doing something really innovative. Also, the pandemic was in the middle of all of it, and we're also we're doing something so different that there's a lot of work to show that we're doing it in a way that has good guardrails and is set up well. So it's been a big piece,
right?
Yeah.
That's the big one. There's like so many people out there that probably didn't want you to do it because it's the funds, right? They're like, fuck off.
Yeah, it's, people make bank off it, and and I think there's and it's very tight knit, and it's where I think a lot of people see that that this is where we're starting to compete quite a bit more in the finance industry. I think
and control, right?
Yeah, so we've created a KiwiSaver which will be live soon, and people can join the wait list so they can get in first, but where you can literally create the KiwiSaver you want. You can have it all in a fund, say an ethical Pathfinder fund or Smart Shares,
Berkshire Hathaway,
Pi funds, and then also, or you could go, actually, I want to choose where some of my KiwiSaver goes, and you can have 50% in one of those funds, and then you can have 50%, up to 50% invested in things that you choose. So, in the exchange rate funds or companies that you want to be
aggressive, or they want to be moderate, or if they want to just know where their money's going. Yeah,
and then once you've gone, hey, I've selected this, we show you, oh, cool, well, based on all of this, the risk profile of your KiwiSaver is here, and show them the diversification of their KiwiSaver. So just way more insight, way more control, and really help people build their confidence and real understanding of where their money is going. So it's really exciting to be able to create this thing that's either pick and mix or you build, and then a place where you can see the money that you're developing for the longer term in one place.
Yeah, I'm on the wait list for that.
Cool.
I'm really excited about that because
I've got my KiwiSaver with Sharesies now. I love it. It's so good.
I feel like my KiwiSaver my provider gets acquired every 6 to 12 months. Like every 6 to 12 months, I get an email saying, "Hey, we're now so and so," and I'm like, "What the fuck? How do I even log in now? What do I do?" And it's like,
the buy, yeah.
They just keep getting bought. I don't even know who it is at the moment. Actually, I should know. But yeah, it'll soon be Sharesies. And so,
well, the great thing is when you sign up, you don't actually have to know. We check based on your IRD number and sort it all out in the background.
Oh, nice.
Yeah, so
I'd expect nothing less. So hey, during all this and growing companies and the likes, you and Leighton obviously had a baby as well, and so you took some time off. Took some time off, and then was it Sonia stepped up initially as CEO, and then when you came back, you tell the story better.
No, yeah, sweet. Leighton and Sonia co-CEO'd when I went on maternity leave the first time, and then I transitioned back into CEO, and then I went on maternity leave a second time, and they co-CEO'd, and I was actually with Kat and Ben. You interviewed.
Yeah, Kat's coming on the podcast later today.
Oh, nice, awesome.
Or in a couple of weeks.
Yeah. Whenever it's a show. Yeah. And down south, they sometimes organise some people to get together, entrepreneurs get together and have real deep yarns. And I was down there and Leighton and my kids were down there with me. And Layden and I just started talking about, I actually think we should, when I come back, what about a 3 EO situation? Why not? Why don't we do that? Layden actually coined it 3 EO. I was like, why don't the 3 of us be CEOs? He's like, 3 EO, I love that. So then Ali,
Why? Talk me through why. Was it because you were so impressed with what the job that they did?
Oh, it's all of it.
Did
it's
you
like,
feel weird about coming back in after what they'd done? Or
it's probably, I think we've also, I think it always felt weird how we had to pick a CEO at the start, and we really tried, we're like, why? And then we're like, okay. And I think that always sat weird, like, why do we have to do this? And, I'd come back and we'd always operated as equals, and that was really important to us. And I was like, well, why don't we just have that on paper? Why don't we just operate like that on paper? And how could this work? And I'd done a lot of reading about decentralized leadership, and I was quite fascinated in that space. And having this co-CEO model work really well, I was like, well, what is the best place for us to to work? And so I talked with a chair, and who was also based down there. I had a little yarn with her, and I was like, how would you feel about us trialing a 3EO when I come back? And she was like, yeah, more for it. She's like, why not? It felt like that's something we could do. So we set it up as a trial for 6 months, and then, or maybe a year. I think it was 6 months. And then we did a bit of a review, and I was like, I think this is working. And 2 or so years on now, Sonia's on maternity leave at the moment, but it's really nice.
Did the roles and responsibility, like the responsibilities, largely stay the same?
It did at the start, and I think it's starting to change. At the start, it sort of was like, okay, cool. Well, we'd have quite a big senior leadership team, and have, say, 3 or 4 people report to each of us, and then it was up to us to be really connected and keep each other in the loop, so people didn't have to communicate 3 times or whatever.
Yeah.
But the massive benefit of it is it just enabled us to move so much faster.
Yeah.
Like Layden, Sonia and I know each other so well now that if somebody asks for a decision on something, I can pretty much think I think Layden might think this way and Sonia might think this way, or they actually will care a lot about this, so we should include them, versus, they'll trust me to have this decision and we can go. So it's a real... We've really tapped into each other in that way.
Tony said the same thing when I asked Tony.
Oh, cool. That's good to hear.
I said, how does it work with like a 3-year? And she was like, they surprisingly know their strengths and weaknesses so well that they know if they can make a decision isolated or if they need to bring the other 2 into the room. And she was like, and they have that trust and respect with each other. And it helps with the larger the business to be able to go to someone if they need to, depending on who's there and the likes. How does it work with the chair relationship? Like obviously the CEO and the chair relationship is so tight. How does it work having 3 people?
So Layden, Sonia and I are executive directors too, so that's kind of makes it really easy because we're all on the board together. We've all and we've all
good voting power.
Yeah, and Ali has been with us since pretty much the start too, so again it's really tight relationship there. And
so lots of democratized, like in business. And is that because you worked for big SaaS company that had more of an authoritarian figure, and that you were like, hey, I want to share this journey with people?
I think it's probably more based on we had a strong founding team, and it was right for us, and right for what we care about and how we want to bring Sharesies to life. So it's probably more about a progressive rather than a anti-something.
Yeah, cool. Yeah. Awesome. Hey, so if you're talking to your kids, so you got 2 kids, what? Yeah,
5 and 3.
Oh, yeah. Awesome, fun ages.
Yeah.
When they get old enough to say, hey, mum, Sharesies, this company thing, what do you look back and say, oh, this was the most fun, this was the moment that I knew that this is what I wanted to do for the rest of my life, whatever it was. What's the one moment that you look back on so fondly with Sharesies?
I mean, when they ask me that question, I don't know what that moment will be. It might, but
that was a really terrible analogy.
But if I think about it now, I always find these one questions really difficult. My mind doesn't have a pecking order sometimes on things. But
I definitely feel like that meeting is a big one.
Yeah.
What about we started the opposite? What's been the hardest time at Sharesies? What was the moment that you were really not sleeping so well?
Oh, well, obvious. Yeah, what we went through at the start of this year, that was really difficult, and just heart goes out to everybody, kind of impacted. So that, and I think the there's this moment that just comes to mind all the time of when I knew that this founding team was really going to work and that we all really did care about the same thing, which was when Sharesies first went live, we were interviewed by TV1 News, which was like, whoa, this is exciting, we're going to get it out there. And we had this interview, and so
did you prepare for it? Did you do like training or anything, or did you just wing it?
I think at that time we did have a PR agency supporting us, which was helpful, but we didn't know what we were doing. We figured it out, and so we're sitting in front of the news, and it's 6:15, and it starts to show, and we start seeing people signing up, and late at night, suddenly we're all in intercom waiting to answer questions, and we started to go, this isn't working how we thought. Where when somebody signs up, they need to be, we need to check their identity. And one of the identity services decided to have a blackout period at that time right at that time. And so the first screen, thankfully, is capturing people's email addresses, so we could contact them, and they could contact us, but they couldn't get through to finish their identity.
Not a great time to be on intercom then.
So that was like, no. And, it could have been table flipping, gutted moments, but we just laughed, and the people that were joining us were just laughing along with us too. They're just like, Murphy's Law, that sucks for you, but what can you do? And majority of those people that tried during that time did convert and become investors on Sharesies, but it was a real moment where it was a real hard part, something we were really excited about, and it not working. And our attitudes at that time was just muck in, figure it out, we'll get an email out. And it wasn't no blaming, no woe is me, there's none of that. We just marched on, and I think that's a real attitude in a way that we problem solve a lot.
That's when you really get to know people, right? When you're tested in a situation and people's true personalities come out. And so I love that. That's so cool. I love that you came up with that story. Hey, so what's the future look like for Sharesies then? Like where do you see it going?
Yeah, it just feels like there's so much to do. Our vision is to give someone with $5 and $5 million the same money opportunities, and there's a lot in that. We started with 6 investment options to now over 8,000. So it's really important that when people join that they don't feel too overwhelmed and they know where they can get started. We've also, having a lot of people who are developing with us and becoming more experienced investors, and so making sure that we've got the things that they need, such as, we'll be rolling out extended trading hours for those that want to be trading on the or buying and selling on the US exchanges, but maybe in better daylight hours. So there's a bunch of things, we need that we're adding in that regard, to also making sure that we really don't want to create a platform where there's a different class of investor. They're a Sharesies investor, that's just for kids, or that, it's not like that we are for them, and we need to be for everyone. So making sure that we're attracting also people that have a bit of money and also need to be able to invest and develop it in ways that are connected to what they care about. And so so making sure there's just so much to do in here. Our Save product is really important to come out at the moment. Sharesies Save, it's got a great interest rate and there's no limits on it, which is really important, I think, in this time where people can know, I can get access to this, it's working as well as it can for me, and there's just no hoopla to go through if something does happen, given, if you've rainy day comes, or you decide you want to travel, or whatever is going on in somebody's life. So that's important. And then KiwiSaver, just changing the game there is going to be a big part. So that's a key part of what we've got on at the moment, but there's a lot more money opportunities that we can do over time.
Yeah, it's interesting, KiwiSaver. As an Aussie, right, like superannuation is so much easier to get more money from super for a start in Australia. We're like 10, 12% over here. Some people are only 3%. So giving people the ability to start thinking strategically about their retirement, from an earlier age, and to be controller and to put into companies that, you feel good about, is quite exciting. Touching on Australia, like how's the Australian sort of market gone for you?
Yeah, Australia is going really well this year. It's definitely, it takes time, and I think you've got to be patient when you launch in a new country, where you've got to build up that community, you've got to build that trust, you've got to build that voice and credibility, and really make sure your product is or what you're offering to people really matches what they need in that environment. And we're really starting to I think show a lot of that. We've got around 50,000 Australian investors on our platform, and that's growing really well. We've got quite a few enhancements, like roundups and things we're going to be launching there soon. So it's the team are really humming there, and we've really built a great community and are really well connected in with what people need over there at the moment. So it's going really well. Another part of our business is company partnerships too, because one thing we learned as we got into this industry more is like there's more doors that are locked to people that we want to open them up, open up opportunities to. And partnering with companies that are listed on the New Zealand Stock Exchange and Australian Stock Exchange is quite important for that, where we can help those companies provide exposure to the capital raises that they're doing to retail investors, and making sure we're bridging that gap a lot with the Sharesies investors on our platform. To also, I really fundamentally believe that majority of custom businesses, if not all, should have staff have shares essentially, where they can get access to
ESOP
part of the wealth that they're
and,
creating in that company. And so that's another thing we do with partnering with companies, is helping them create and share their staff share plans. And so there's a lot that we're doing in that space too, to really bridge these divides and get people a bit more connected. And over time, investors such as those on the Sharesies platform will have a lot of say. They can vote and they own these companies, and I think it's really important that there's closer connection.
Awesome. Do you think Sharesies will be a unicorn?
I think that's I can definitely see a future where it is. Yeah
Awesome.
Yeah.
I love that. I hope it is too. So normally, I'm not sure if you watched any of the episodes or listened to any of the episodes from the last season, but normally I wrap up with what makes you happy, like in a question. I'm going with a new question this year, which is trying to share a bit of people's wisdom and knowledge. And so, I will. Well, what makes you happy anyway? I'll ask you that.
Right now it's time with my two children. Like the first part, I felt like I had to give a lot of energy, and now I feel like there's such a good give and take. And I enjoy just the storytelling and the play. It's just really fun. And
fun age. It really is like that age where you start to see their little personalities coming back to you, and
they're just soaking up knowledge, and what can I teach you? And learning how to teach, that's a hard skill. And then I think on the Sharesies side, it's definitely anytime I hear like your story then of your kids and how you've been that stuff, it's just like there's meaning in what we're doing, and we're having an impact, and it's really helping people's knowledge and understanding of money. And I think that's the stuff that gets me in the heart too.
It's cool, right? Like I've got Simon from Banker coming on the podcast today as well.
Cool.
And so for
I'm
me,
catching up with Kendall next week actually.
I love their story as well. Like for me, educating kids, the younger you can about, financial management is so important. So my kids love listening. We go through Sharesies all the time, and we look at what investments we can make. We look at how they've been tracking, I had, when I'd sold a few houses, I had a bunch of money in the Sharesies there for a while, and it was that was that crazy GME time, and they were really scared because we're doing this and doing that, and I was like, well, what we do is we just put a little bit of money in because we can be aggressive with this, and we can have this over here. And so it's been cool because now they have, my daughter's 14, wants to move overseas for a year, do a gap year, and find herself before she gets to university. So she's saving for that on Sharesies at the moment, and so she's very excited about how money, how she can invest and how she can put some in the bank and how she can think about it. And so for kids to be doing this, it's fantastic. So well done. I appreciate it.
Oh, cool.
The question that I do want to finalize is that if we were going to put something in the show notes that says, hey, this is the one thing, the one person, the one podcast, the one book, the one website that I just find information from, or I learned something that really was impactful, what's that one nugget that you would pop in the show notes of this podcast for others to go off and look into?
I'm going to go based on what I'm interested in at the moment, because I think if I'd have to think quite a bit to think of it more holistically in terms of what that one thing would be. But this year I really wanted to focus a lot on health and understanding that. And so I've just started reading Outlive by Peter Thiel. And I think just thinking, if people are running startups, or that it is just getting that balance of how am I getting exercise and getting enough good sleep to then have that health span and that longevity, I guess, to make the most of that. So I think that's something that I'm interested in at the moment, if that's helpful. But if you want something a bit more...
I've read it. It's a great book.
Oh, okay, cool. Yeah.
And I've watched all the podcasts.
Yeah, okay, cool. Okay, cool.
So,
So you're right on.
Yeah, great advice in my experience.
Cool.
Yeah.
Nice.
Awesome.
Yeah.
And so on podcasts, right, Sharesies has a really successful podcast. How did that come about, and how do you think it's been so successful? Like, it's always up in the top charts on Spotify. I always set up there. I'm like,
Yay.
I love seeing Kiwi companies up there, you know, versus just the Rogans and Lex Friedmans and everyone, you know.
So Shared Lunch is our podcast, and that's really cool to hear that. What that started with, you know how I was saying before, I want companies to be more connected with people, and those doors are shut. One door I noticed, we all actually noticed was shut, was that institutional investors or big companies would get insights to the management team and the CEO and the board to help understand their investment, you know, if they should buy or sell that investment. And we were just like, why can't everyone have that access? So Shared Lunch really started with, how can we unlock this access to these experts or these CEOs of companies to really help people understand what's going on behind the scenes or what's happening in the economy. And like one recently we had with Brad Olson around, should you be investing in saving and this economy at the moment, and is it more invest or more save? It was a really fascinating conversation. And so that's where Shared Lunch started, and it's really kind of lived to that. That's why it exists, is to really unlock those conversations that we often don't get to hear, and help us and put an investor spin on it too. Like, what does this mean as an investor?
Yeah, awesome.
Yeah.
Hey, well, I just want to say thank you for like everything you've done with Sharesies, all 6 of you that have, you know, built this.
Well, there's more than that now. The whole team have built it. Yeah.
How many people now?
So there's 156 at the moment. Yeah.
Holy fuck.
Yeah.
That's congratulations. It's cool, right? And it's I'm always really proud of companies that have like this ideology from the start about what they want their company to be, and they hold to it. You know, like, and I think
it's in our constitution, which is great.
Well, it's harder to hold to it, right? That's like, especially when money gets involved in VC and other people and scaling, and you're thinking about this. And it's been something that I've looked at Sharesies, and I'll be honest, like I've been like, I don't know if they're going to be able to hold that, you know, like you're going to struggle with that. Good luck, you know, I'd love to see it, but I don't think it's going to happen. And you've proven me wrong. So like, I want to say well done. I think it's great when companies do that. That's the challenge, you know, is to keep it to real as long as possible, and continuing, like if you want to be a billionaire, like if a billion unicorn, how do you do it then, right? Is anyone out there doing it with like ethical values? And
I think Canva, it seems to be on the outside quite a good example of that. I'm not close, but I think that they're one that, you know, have risen really well, but stayed true to their values from what I see.
I've got heaps of friends that work at Canva,
oh, cool.
and it is definitely
so
that.
I think they're a really good example in Australasia.
I think like Mel, like all the information that I've read about her and her husband, you know, like lovely people first and foremost. And so the stuff that they're contributing back and doing now because of the success of Canva is great. And so, awesome. So I love to see Wellington companies doing well. I love to help people share information. And so I just think that it's awesome that you came on, gave back. Really cool chatting with you today. Thanks so much. And excited about the future of Sharesies.
Yeah, let's go. Awesome.
Yeah, awesome. Thanks for coming on. Bye.
Cheers. Bye.
I really love that conversation with Brooke. Thank you, Brooke, for coming on. It was really cool to hear. Like, so there's always perception from me that I'm like worried about founders and the pressure that they're feeling and all these things. And there's so many messages that we hear around the market, and we just don't know them until you chat to someone. And I've got the luxury where I get to sit across the table and hear people's stories and hear what they're pressured in and what they're not pressured in and what they're proud of and what they're not proud of. And I thought Brooke did a really fucking amazing job of talking about how Sharesies has been successful because of the people she did it with and the conversations they had at the start, and how that's just kept leveling up and leveling up and leveling up, and some of the highs and some of the lows and how they've handled them. And so, really enjoyed that podcast. Thanks so much for coming on, Brooke. I know everyone would enjoy that podcast. I know everyone will take something from it. So please share it around, send it to your friends, get your friends to subscribe. I'll buy you a beer if you do. I probably won't, but thanks for watching anyway.
This podcast is produced by John Otaka from Empire Films.